So most people will argue that we are not in a property bubble, but what if I told you that a shipping container home just sold for over $2 million in Canada? That is exactly what has happened. Check out this video right here.
This tiny home that is just 8 feet wide can be yours for a cool $1.5 million. This was built from converted shipping containers in downtown Toronto. It's currently listed for $1.5 million. It's only 8 feet wide. It's split across 4 floors, and it's...
Now, if you thought that video was crazy, just wait until we watch the second video I've got prepared for you guys towards the end of today's video. But I want to first look at a few more charts that proves my point. The Canadian real estate market could be one of the most overvalued markets in the world. This chart here looks at the disposable income of a country versus the house price of the country. And as you can see on the left-hand side of the chart, America's home prices versus the disposable income is somewhat manageable. We can see that home prices is somewhat following the increase in the disposable income in America, but that is not the case in Canada. We can see here that home prices since the year 2000 have gone absolutely parabolic. Meanwhile, the disposable income is increasing, but it's certainly not increasing at the pace of property prices. And this is why it is very, very difficult to be able to afford a home in Canada. I love this little graphic here. It is showing many of the major cities around the world, and it is showing how many times the annual income it takes for you to buy the average size home. So we can see here in Hong Kong, it takes 18 times the average person's income to buy the average size home. So for example, if you're living in a rich city and the average income is around $100,000, that means you have to go $100,000 times 18.8 in Hong Kong to get you the average size home, which would theoretically cost $1.8 million. Now we're going to leave the maths to the side for today's video because I just want to point your attention to number 3 on that list, and that is Vancouver. Vancouver is the third most unaffordable place in the entire world to buy property because, as we can see, it takes 12 times the average Canadian's income to buy the average size home in Vancouver. Now, this is Vancouver. This is separate to the video that we just showed you from Toronto of that shipping container home, because that was actually taken in the other major city of Canada. But that's not the only really scary graphic and statistic coming out of the country of Canada. So let's add a little bit more color, showing how extreme that 12 times your average income really is in Canada. Before we left the gold standard, back in the 1940s and the 1950s, we can see here from this really cool chart off the website WTF Happen in 1971, we can see what the average price of homes used to be, okay? They used to be around 2.3, 2.6, 2.4 for many decades. And then all of a sudden, you can see what happened when we left the gold standard. All of a sudden, home prices now cost around 7 times your average income only 50 years later. Now, this chart is looking at America, so it's not looking at the most overvalued places around the world like Sydney and Vancouver that we did just look at. But this extraordinary property bubble and enormous price to income ratios in Vancouver and Toronto is why the IMF is calling Canada one of the most unaffordable cities in the entire world. Okay, so there's some pretty scary charts and statistics, but we shouldn't have to worry about this until property prices begin to turn around a little bit, don't we? I mean, there's nothing wrong with a rising property market even being slightly overvalued unless prices do begin to crater. And that is exactly what's happening in Canada right now. This is a 100-year chart. It is measuring the annual change in home prices. So the blue bars are when prices are going up and the red bars are when prices are going down. And we can see here in 2023, Canada is experiencing its largest crash in home prices for 1 year since it saw in 1980. Okay, this is enormous. The Canadian property market is beginning to turn, and this could mean some pretty scary things for the rest of the world. This is another chart that kind of highlights how the property market is beginning to change in Canada. we can see the blue line is beginning to crater, and that is the property market of Canada. And we can see something really interesting here. A lot of people ask me, okay, Luke, but how far are these property markets going to crash? Nobody has a crystal ball, myself included, but I think just looking at how overvalued Canada is compared to America could give you a little bit of a gauge to show you how overpriced property prices in Canada actually are, because this yellow line here is the American real estate market. And you can see for somewhat 30 years here, between 1970 and the year 2000, America and Canada's property market kind of grew in sync there for a little while. And then something changed. Canada's real estate market really began taking off, okay? America had that property burst in the 2008 GFC, but Canada was somewhat unaffected, as we can see. They had a small 10 to 20% crash, but then property prices just completely took off to the moon and they began making new all-time highs. This was not the case for the American property market. We can see it took America nearly a whole decade before they actually breached their prior all-time highs that they did see in 2008. And this is why property managers and property homeowners are beginning to panic in Canada. I want to show you a quick video about what has recently happened to a couple of girls in Canada who were renting what they used to think was a very affordable home until something changed in the past 12 months. I'm going to play that video for you guys now.
Our landlord increased our rent by $7,000 per month.
Sisters Yumna and Khadija Farouk have lived in a midtown Toronto building for the past 3 years. Their rent was $2,500 per month. The landlord raised the rent to $3,500 a month, and when they had concerns and wanted to change their lease, the landlord raised the rent again to $9,500 per month.
What a crazy story. Would you guys be able to afford your rent if your landlord actually increased the price of your rent by over 300% in under the space of a year? Because that is exactly what happened to those two poor girls in Canada. So what comes next? What created the bubble? And why do I believe we could be seeing the signs of the bubble bursting that could lead to somewhat of a catastrophic crash? So why do I think that this time could in fact be different? Those are the most dangerous words in investing, but I'm going to prove why you should not actually be buying this dip in Canadian real estate today. Because for the past 40 years, all of you real estate investors and all of your mortgage bros have come out and said that you should be buying every single dip in property because it only goes up. It only goes up and to the right. But that is because interest rates have only gone down and to the left. If we have a look at this 40-year chart of mortgage rates, we can see that they have steadily declined, and they have declined with the federal funds rate in the US that was dropped from around 18% in 2020 all the way to 0% in 2012, and then all the way again in 2020 it was dropped again. But for the first time in a long time, interest rates not only in Canada but all around the world have been jacked up to their highest levels in over 20 years. This chart here is really illuminating, and it's actually looking at the variable rate mortgages in Canada. And we can see that it is reaching the highest levels since the year 2000, which is absolutely absurd. And this is very interesting because most Americans haven't actually heard of that term, variable rate mortgages. What is this? Well, things operate a little bit differently in Australia or Canada. What actually happens is you can't just sign a 30-year fixed mortgage rate like you can in America. Most Americans are sitting pretty right now. They actually locked in a 30-year mortgage rate at somewhere around 3 to 4% if they got a mortgage in the year 2020 or 2021. But that is not the case for Canadians and Australians. We have these variable rate mortgages, and like the name suggests, you get a variable rate. So for example, in Australia, you can get a 30-year mortgage and only the first 5 years of that mortgage is actually fixed at say 3 to 4%, like the Americans get for the full 30 years. But after those 5 years, your interest rate actually spikes up to the new interest rate level. Today in the US, Canada, and Australia, that new interest rate level is somewhere around 8, 9, or even close to 10%. So that is quite a change. And this is why we can see that people in Canada are abandoning the variable rate mortgages. We can see from this headline here, homeowners abandon variable rate mortgages for fixed rate alternatives as interest rates rise. And we can see this rush away from variable rates has actually happened for 13 months in a row. And this chart here with the blue and the orange line is pretty illuminating to look at. The orange line is the rise of variable rate mortgages. So you can see between 2020 and late 2021, when interest rates were very, very low, down near zero, and central banks had not begun hiking interest rates yet, you could see the race into the orange line. The orange line's going up. That means people are racing to get into these variable rate mortgages. But as soon as interest rates started to be raised, we can see that orange line absolutely crash. And that is because people are getting out of these variable rate mortgages. And that is because they're finding themselves in a hole. I want to read this little headline here. It says, since the Bank of Canada started hiking interest rates in March, borrowers have seen their monthly interest costs skyrocket by approximately 70%. So they break down the average here and they say if you have an average mortgage of around $300,000, that equates to roughly an extra $820 more in interest each month for the average borrower. $820. That is absolutely huge. But some people don't think it is absolutely huge at all. I want to read this little quote here from a Keynesian economist. He says, despite the sharp rise in borrowing costs as a result of the 10 Bank of Canada interest rate increases, Poulter says variable rate borrowers have so far been extremely resilient. What kind of madness and clown world are we living in? I want to play you a few videos of the Canadians on the ground in Canada right now who, to me, they don't seem very resilient.
There's a new trend on TikTok, and it has nothing to do with twerking or the latest weird challenge. It's desperate Canadians breaking down about their inability to make ends meet, even with a decent job.
I want to know how the hell people in Canada are even living. Like, I just got a good job. I started in September, but even with that job, it pays less than 40 grand a year. And it's a job that requires, like, education, and even on that job, like, I still can't do shit. I can't buy anything. I can't afford the rent these days. Like, I'm just feeling so much despair. And I know I'm normally, like, really, really positive, but I'm just, like, how is everyone else, and are you okay? Because the answer is probably no.
The desperation is building up in Canada. As of last count, that video had 5.4 million views on TikTok, and there are dozens more like it. And it's not just anecdotes on social media. The data bears it out. A survey from insolvency trustee firm MNP Limited found that in July of this year, 52% of Canadians were within $200 of financial insolvency. That's up from 46% just 3 months earlier. Trouble is spreading quickly.
Now, I certainly don't want to make light of a pretty touchy subject, okay? It's very clear. People are struggling with the cost of living, and that is largely due to the interest rate hikes. It is largely due to central banks, full stop, okay? They're the ones who have created this enormous inflation over the past 20 years. They are the problem. Bitcoin is the solution. We need to return our money to reality, okay? We need to actually operate on a monetary system that nobody can control and corrupt, okay? And when we do this, we will hopefully demonetize housing. And when we do talk about demonetizing the $330 trillion real estate market, a lot of people like to ask me, Luke, just how much of that $330 trillion can Bitcoin capture? Well, if you want to see the bullish numbers behind that and why I could make a case for Bitcoin being worth tens of millions of dollars in the future in today's dollars, I recommend you check out the video that we recorded on that topic. You can find a link to that one right there. And with all that said, I hope you enjoyed this video today. Let me know if you want me to do more real estate videos, and I will see you all in the next one.